This is an important video, guys. I'm going to share my crypto portfolio structure, my portfolio for 2022, and how I'm going to carry it out throughout this bull market. I'm going to share my allocation sizing tips, how I enter and exit coins, and I'm going to share a bunch of important stuff so you guys can crush 2022. Let's get right into it. For checking out the channel. Every day we put out a new video about cryptocurrency education, markets, giveaways, and more. Make sure you hit the subscribe button and notification bell so you don't miss out on any content. Now let's go to the moon. So this is my crypto portfolio for 2022. I've been in crypto since early 2017, and I've learned that I wanted to base my portfolio out of Bitcoin, and that hasn't done me wrong. The mindset that I was in is Bitcoin is going to, appreciate tenfold, and holding from 2017, it's done that. And holding it for the next decade, going through all these halvings, going through, supply shocks, I think Bitcoin will be hundreds of thousands of dollars, $500,000, and even within a decade, maybe up to $1 million. So why do I hold Bitcoin as, the majority of my portfolio? One, because it's the #1 coin in terms of market cap. And when a bear market does come, Bitcoin actually falls the least from what I've seen. Altcoins get smoked, and I do believe Bitcoin will reach hundreds of thousands of dollars and even $1 million. So if I'm basing my portfolio out of Bitcoin, for math's sake, let's just say 10. My goal would be to get to 20, then 50, then 100, because I know over time Bitcoin is it's producing gains. It's multiplying in price, and maybe I'll see that tenfold again from today's price where we're at 46K. Maybe I'll see $460,000. So I'll just have 10x'd my portfolio if I'm basing it out of Bitcoin. And it's important to note you can base your portfolio out of everything. It's just important that you start tracking. If you can't measure, you can't manage. And that's from Tony Robbins. So that's like, point A to point B. If you're looking at your GPS and you don't have point A, you don't know where you're at, you don't know, what you have, you can't even start, you can't even get to point B. So it's important to, make a plan, figure out where you're at. How much crypto do you have? What's the next goal? So I have 53% in Bitcoin. I have 26% in Ethereum. Here's the colors right here. I should have posted the actual text here as well. But Bitcoin, Ethereum, altcoins, upcoming IDOs that I've allocated to, and then high risk is 1%, and I'll go over all of them. So it's important that you pick one coin. That could even be fiat if you want to see a higher fiat value. So 53% or majority of your portfolio is fiat, or you have 20, 40%, whatever it may be. For me, it's Bitcoin. And I explained why, because Bitcoin, I've seen it tenfold. I've seen it, the mindset I'm in is it'll keep increasing in value. Yes, it is highly volatile. Yes, there might be years where it is down 70% or 80%. And when we're in a bear market, I said this is my crypto portfolio for the bull market. In a bear market, it's different, and I'll share with you guys, in a different video, and I'll share with you guys the exact holdings in my altcoins. I don't want to get you guys distracted with different altcoins I'm in. This is just the fundamentals. This is just learning the fundamentals, getting disciplined, having a goal, and figuring out, what's next or what to do, because a lot of people just buy coins and they hold them till they go to zero, or they're nothing or whatever it may be. People never take profits. They see it go up and then they're back down even lower than where they got in or whatever they put in. So with Bitcoin, I'm hoping to multiply my portfolio. I'm hoping to stack Bitcoins, and that brings us to Ethereum. Ethereum, I'm a huge fan of. 26% of Ethereum. And before I go into Ethereum, let me touch on the one thing. Yeah, I'm stacking Bitcoin. You can stack whatever it may be. If that's Solana, if you think Solana is going to explode 1,000%, I have a decent portfolio, so I can't go all in these coins. I can't risk my portfolio. My goal is to lose the least amount of money while, having some awesome upside. I'm always trying to mitigate risk. I'm trying to not lose money because we work hard for this money, and I've worked super hard from 2017 all the way till now for all these trades, all these, successful wins. When you deviate from your plan, you take losses, and I'll share some of the losses when we go into sizing and allocations and tips later on in the video. So you can stack whatever you want, whatever that may be. You can have Ethereum as your portfolio, majority as the leader, and you can stack Ethereum if you want. That you can have no Bitcoin. For me, it's Bitcoin. It's the most stable cryptocurrency. If you're looking at the top 10 or 20, because when the others fall, they fall to extremes. Yeah, Bitcoin does as well, but it's a little bit more stable, and it's number one in terms of market cap. So you can stack whatever coin. It could even be Litecoin. That could be your stack, and you could be looking to do, from 100 Litecoins to 1,000. Mine is Bitcoin. I take my profits in Bitcoin. Next is Ethereum. I don't need to explain why. The NFT sections have blown up. The whole DeFi sector, it's the future. I mean, Ethereum right now, if you're not in the DeFi sector, you're missing a ton of gains. So I have 26% Ethereum, and it's just multiplied. And why I think that Ethereum is a strong pick here, and why I have it a quarter of my portfolio pretty much, is because if we look at the chart on Ethereum, you can see that holding it from January, right here, January 1st, against Bitcoin, you've actually doubled your Bitcoin. So if you put 100 Bitcoin, you've tripled your Bitcoin, sorry. So if you put 100 Bitcoin, you're at 300 Bitcoin. So right here in this price point, I think Ethereum is going to double again over Bitcoin. We're seeing a ton of usage on Ethereum. We're seeing a ton of volume, and I just think, the charts are looking very bullish. This is going to continue right here, and I think that we will double. So what does that mean? That means that Ethereum will double, and that brings me from 26% to the 52%. So I'll have basically, have matched this. So then my portfolio would actually be, my sphere would look different. So I'd have to rebalance. So let's just say I have 10 Bitcoin here and 5 Bitcoin in ETH. When this reaches my target, I can shave half the Ethereum into Bitcoin to keep this ratio and to keep my Ethereum position. So when the bubbles, when the buckets, when the other pieces of the pie get bigger, I shave. I take profits. Learn how to take profits, or you're never going to take your profits. Like, you're giving it back to the market. You need to learn how to take profits. Yes, there's coins that you can believe in, but when they're performing very well, you need to sell into strength. When are you going to sell? When everybody's fearful? When there's nothing for you to take? So I will convert majority of my Ethereum back into Bitcoin because I've had a major W. I've converted a huge piece of pie into double of that and back into Bitcoin. So I might liquidate 80% and make it a smaller piece of pie. We'll move on to altcoins, 15%. I have 20 or so plus altcoins that I'm holding in this 15%. Majority of them come from the IDOs that I allocate in. And, the highest, largest holding percentage in one of them is 5%. The next one is 4%. And then it's like 1, less than 1, and then you get it. So I start shaving when they reach over 5. And I'll start shaving it back into Ethereum because majority of the time, these altcoins, I'm trading them on the DeFi side. Sometimes I'm trading on Binance and KuCoin with my Bitcoin to multiply that or to, appreciate the Bitcoins that I have. But I'm usually turning this into more Ethereum. And why I'm turning it into more Ethereum is because it's in an uptrend against Bitcoin. So the more Ethereum I'm stacking right now, it'll give me a potential to get more Bitcoin. It's just awesome the way it works, and I've been doing it for all of 2020 and 2021. And 2021, I stacked as much Ethereum as I can, and I converted into Bitcoin. Instead of stacking Bitcoin, essentially I was stacking the double amount of Bitcoin, as this did a 200%, 300% from the 1st of January. So if that makes sense, I'm stacking Ethereum still because all the profits I can make double that back into Bitcoin. So my upcoming IDOs, these are new projects coming out. I'm in Launchpads, I'm in Dex Force Ventures, which gives me awesome opportunities to invest into new projects. Seed, angel, private. So I have about 5% of fiat that is allocated, and I'll be getting these projects in like a drip, in months, Q1, Q2, and as there's a lot of vesting schedules that I'm behind right now. And then we'll go to 1%, and that is high risk. And then we're going to move into sizing allocation, like how much you should get into a trade, how much should be on exchanges, how much, all that stuff. It's very important. And you need to, this comes, tied with discipline. because the more you practice this, the more you follow your plan, the less likely you're gonna lose. And I'm gonna share some of the losses I've had because I FOMO, you know. So 1% high risk, and I was super pissed. I had a huge bag of Dogecoin. Check out the channel, 2019. I've been charting Dogecoin since 2017. $9,000 I bought Dogecoin 2017, about 3 million Dogecoin. I have the pictures, I have the transactions. Anyways, I doubled, tripled. So I bought it with Bitcoin. I put 1 Bitcoin in Dogecoin and it went to 3 Bitcoins. And I've done it multiple times. That's the W I'm looking for. Then Elon came out and started going hard with the marketing, with the tweets and things like that. And that 1 Bitcoin would have been 55 Bitcoins. It would have been up to $2 million at one point. But I sold because I follow my plan. Sometimes it works, sometimes it bites me in the ass. But I adapt. And what did I learn? Don't sell all of the pie. If you sell all your winners, you're left with underperforming assets, or you're left with some losers. Obviously, you have your Bitcoin and Ethereum here, but if you sell all your altcoins, your high-risk coins, your upcoming IDOs, then you're just left with 2 coins that aren't overperforming or doing the most. That's why you have different sizings for them. And this is where it comes to the high risk coins. I would chart these coins, and I learned don't sell all of them. Shave 90%. If you put 1%. So if you have $1 million, and that's the figure we're going to use for the sizing, because that's easily divisible, and you could do 100,000, you could do 1,000, $100 if your portfolio is like that. Just remove the 0. So 1%, $1 million. You can put less than 1% in these coins. Let's say $1,000. That's a tenth, 0.1% of your net worth. And the thing with these high-risk coins, they're doing 100x. Some of them are doing 1,000x. So 100x would get you $100,000. It would net you 10% of your portfolio. If the damn thing hit 1,000x, you'd get up, you'd match your whole portfolio, which is just crazy. You don't need to bet the farm. And I went into this high-risk coin. I put more than 0.1%. I probably did I put 10 Ethereum in. And it was because I had FOMO. I missed out on Hex, 10,000X, and this Coin Rex came out. I know some of you guys saw in the Discord, and I just, no research, kind of just aped right into it. And I put maybe 12 ETH, 99% down in the next couple days, and it's all right. I bought this donkey NFT for 18 ETH, and I sold it for 8 ETH. So that's 24 ETH I lost. So you have to know when you have your losers, you need to figure out what happened there. And we'll switch over to the whiteboard, but those is because I over leveraged myself in high risk areas where the reward's huge, but the risk is very huge as well, where $1,000 would have been sufficient, because that $1,000, had that have worked, I would have been maybe reaching 6 or 7 figures with that. If my 10 Ethereum worked, I would have been I was greed. And then my greed came because I missed out on 10,000 hex. 10,000x, not hex. It's funny. So let's get into the whiteboard. Let's say your account is $1 million. And let's go back to this quickly, because 90% of my funds are in hardware wallets spread out. 3 hardware wallets spread out all around. The other 10% is on various exchanges, like 2% on an exchange, 1% on an exchange, a couple percentages on, the DeFi side, so I can trade on MetaMask and things like that. But majority of the funds are behind hardware wallets. If you are moving into trades, and this is the perfect transition with your portfolio. So let's start at $1 million, because it's easy to double 1,000. I just took $1,000 and I turned it into 14K on one coin. I'm not going to take $1 million and put it on a low cap coin at a 40K market. I would turn the market cap into 1 million off just myself. So it doesn't make sense. As a smaller portfolio, in 2017, I understand when I had a small portfolio, I was just going all in. I was just coin flipping from my whole portfolio from one coin to one coin. And I got wiped a few times. I had to re-enter a few times. But as a larger portfolio, that's not possible. You're going to lose everything, and it'll take you so long to work back to this huge number if you have it. This is an easily divisible number. So $1 million, you could, imagine we're trading $100,000 or $10,000 or $1,000. So it's easily divisible, and we're going to be using percentages. So I've paid up to 6 figures plus on mentors, courses, books, courses, whatever whatever it may be, in-person masterminds, on trading, self-development, my mindset, all of that great stuff. And you want to take things from mentors and you want to implement them. I learned this huge thing from one of my mentors, and it was a mentor I don't work with anymore, but you usually outgrow them and you find new mentors who are hitting bigger goals, and you want to pursue that. So there's nothing wrong with that. So $1 million, he told me, look, if you can't take 1% of your portfolio, and 1% of $1 million is $10,000. If you can't trade that and double that in a bull market, you should not be trading your whole stack. And that's relevant for anybody with any amount of money. If you have $10,000 and you can't even trade that $10,000 profitably, consistently, you should not be trading that whole $10,000. First of all, this brings us back to hardware wallets. If you're trading your whole stack, that means your whole stack is on one place. All your eggs are in one basket, whether it be Binance, MetaMask. Okay, hardware wallet's not too bad if you're in and out of Uniswap, but that means you're just trading your whole thing in and out of one coin, And this is an awesome book, Trading on the Zone. It goes over mindset and things like that. And you can build the self-confidence, the false self-confidence on 1 or 2 trades, or 4 or 5 trades. And the way the market works is it'll humble you. When you decide, okay, I just multiplied my portfolio a few times, let me go all in on this coin. It's, sure to do well. And that's when the market humbles you. And that's when you lose everything. And it happens all the time. 90% of people lose in markets. So you don't, want to be going in and out of in and out of any asset with your whole portfolio. If you bet the farm and lose it, you can't play the game anymore. And we want to get lucky. And how do you get lucky? By playing. And how do you play? You have to have some funds. So if this is what stuck with me, take $10,000. If you can't turn $10,000 and multiply that. So our goal was to take $10,000, and this was on margin trading. So I'll give you different strategies for different types of, let's say margin trading or altcoin trading, whatever it may be. So $10,000 if you had $1 million. So if you had $100,000, that would be $1,000. So your 10K would be right here, and you would try to 10x this. You want to 10x this right here. Oops, my bad, right there. And that would give you 100K. And now you've worked to 10% of your portfolio. You do the same thing. And I mean, I'm just writing 10x. It's a lot harder than obviously just 10x in your portfolio. But from 1% of your portfolio, if you grind it with a consistent strategy, because if you don't have a strategy, and you're just buying random coins, that's not great either. So then you 10x it in a bull market, which is very possible, and you 10x it again. So your 1% you just made into your whole portfolio. And you never, when you're trading, want to lose more than 2% of your portfolio. And that's 20 grand on $1 million portfolio. So you don't want to lose 20 grand in a day. That's a lot. Regardless if you're a millionaire or not, 20 grand in a day is a decent amount. 1% would be 10,000. So if we take 1% and we actually implement that same rule here, it would actually take us 100 bad trades in a row to lose the 10 grand. If we did 2%, it would take us 50 bad trades to lose all of this money right here. So now if you look at the risk management and the allocation sizing, you could take 100 trades to lose 1% of your $1 million. Or you can go a little bit riskier and take 50 trades if you wanted to do this at 2%. Or my bad, that shouldn't have been changed. If you want to do 2% risk, so 2% loss on every trade, then it would take you 50 trades in a row to lose your $10,000. So it would take you 50 or 100 trades to lose 1% instead of going so large into them. So that's how I margin trade. I literally take 1% of my portfolio and I margin trade it. And I do inverse perpetual. So I'm using Bitcoin, the actual asset, or I'm using Ethereum, the actual asset. So if I have 100 Bitcoins, I'm sending 1 to my exchange, and I'm going to use that 1 Bitcoin to try and, trade it up back to 100. That's why I had the 100 ETH challenge. Now I'm going to take 1 ETH, and I'm going to turn it into 100 ETH. If I can't take 1 ETH, it's divisible. It breaks up to 100 million pieces. There's 8 zeros. So if I can't, split that up and break it and make a strategy to take 1 to even to 2, just 100%, then I have no business trading my whole portfolio. I have no business doing so. So even this, and I want to mention the high risk plays as well. If you're looking for $1,000 or 1,000x to 100x coins, you don't, and this is like the recent PulseX video, the recent PulseX launch. People are expecting 100 to 1,000x, and they're going all in. They're risking their whole farm when they can put literally 1%. And if this figure hits, they just doubled their stack, or they even 10x'd it if it did 1,000x. So that's the sense I have, because you want, and when you get overly bullish and you deviate from a plan like this, where you know exactly how much you're going to go in, exactly how much you're going to lose, that 1% or 2%, and then your target. You need to have a target as well. So I'm going for 10%, I'm losing 2%. That's a 5-to-1 win ratio. So you can lose 5 of those trades and win one time to be even. You're not going to win every trade. You need to find a strategy that will allow you to win bigger in terms of percentage wise, where you're cutting the trades short if they're losing 1 or 2%, and then you're letting them run to the upside. So this is very important to have some sort of allocation sizing for your trades, because if not, then you don't really have a plan. You're just kind of aping or just buying into whatever you see with any amount that you decide right there on the spot. But if you have a plan, then you can kind of, reach milestones, reach goals. You can work towards that plan. So this was just like a quick video that was requested over my portfolio setup and the kind of sizing I take into trades, the amount of sizing I take into trades. So into new altcoins and trades, I could do 1% or 2%, because if I'm expecting them to do that 5 or 10x, which these mid or low altcoins can, when it gets to 5 or 10% in terms of a bucket for my portfolio, I start shaving back into Ethereum. And the goal is, I want this to become like a farm. I want this one coin to keep moving upwards. So it goes 10x, I reduce 80%. It moves 10x, I remove 80%. It goes 10x, I remove 80%. The more times I could do this, the more times I'm pulling profit. I'd love for a coin to keep producing those results and tenfolding and tenfolding for me to keep taking profits out. And there are winners like that. And the only way for you to hit those winners is to keep playing the game. And that's not going all in on some random coin that you got shilled on. You need to preserve your capital. That's very important. I'm going to go over some of the crypto picks for 2022. I'm going to share my crypto portfolio structure when a bear market does roll around, and what my structure will be, because I'll be out of all of these different types of coins, in majority into stable coins and pretty much Bitcoin, because when a bear market comes, I've seen altcoins retrace up to 80% or up to 90% against Bitcoin value. Not only US dollar value, they get smoked on US dollar value, but you can actually preserve some of your some of your capital being in Bitcoin, because Bitcoin holds value the most against these altcoins. They get just slaughtered. So I hope you guys enjoyed this video, got some value from this video. Hit the subscribe button, and 2022 is going to be a lucrative year. Let's crush it together. I'll see you guys tomorrow.